Market consolidation. Is there any room left for startups and the mid-market? Moderated by James Scicluna, WH Partners.
So, hello. Now that we all have mics, let's get going. And you see two empty seats, but there was meant to be one more panelist, Johan, who unfortunately isn't going to make it today. So he sends his apologies. Shall we start by addressing the title of this panel? Consolidation. Is there still any room in the gambling industry for startups, for a mid-market, or are we now at the stage where it's basically a big boys game and it's really becoming quite concentrated?
So I think there's always going to be room in terms of the big boys tend to find the turning circles bigger and bigger to navigate their way through the challenges that they're facing. So there's always gaps that emerge, whether that's geographical or product in nature, and that's where there's still a massive gap for newly emerging companies and the mid-market to exploit those opportunities, in my view. I think you see that in the pattern of M&A that's happening outside the huge public M&A deals. I still think people are looking for those changes in geography, those changes in product to give them the most diverse offering, whether that's on the B2C or the B2B side.
Jeff?
Good morning, everybody. Coming from Israel, it would be a little sad if there was no room for startups. But I think startups in this industry will come from two areas. One, obviously, the area of jurisdictions. But two, I think the area of technology. For any startup today dreaming of becoming the next B2C operator, that's probably a dream doomed to failure. But when you look at the platforms available, there is still a lot of room for technological innovation, potentially new verticals, customizations. So I think if there is room for startups, let's hope there is, I think they will come in that area as bolts-on, as additions, as opposed to being the next Entain or 888 platform.
Yeah, fully agreed. And I think we've seen quite a bit of that in the past, actually. We just heard in the last panel, it's all about technology, right? The ever-increasing importance of technology. And I think that is where some startups have really brought very innovative technology and ideas to the market that can be very, very interesting and important for more established players in the market. And that's where we've seen quite a bit of activity in the past. Even on a smaller scale, thinking about, for instance, GreenTube's acquisition of Herosphere, a blockchain-based betting company that actually looked at fantasy sports based on esports. Yeah, so very innovative ideas that are very tech-driven. I think are very, very important, as you said, bolt-on transactions for established players. So definitely lots of room remaining there.
And in your very busy M&A practices, is that the sort of target that you're seeing? So bolt-ons. Is there anything more fundamental? Are there things like the acquisition of platforms? Are there any disruptive type game developers or products that you're seeing coming into the market?
Yeah, absolutely. If I may, I mean, we've seen quite a bit of that because I think it's becoming more important for operators, both on the B2C side as well as on the B2B side, to become independent of other operators, independent of other suppliers. We've seen, for instance, B2B suppliers add on a virtual games unit, B2B suppliers add on platform technology, B2C suppliers that were heavily reliant on buying such technology, adding such technology platforms to their own portfolio. So that is all, bolt-on activity that is increasing. Thinking of, Sportradar's acquisition of Optima GS 2 years ago, roughly, and also looking actually at the B2B side of things. I think there's a strive for B2B operators becoming a one-stop shop, so really allowing them to have all the technology within their portfolio and become independent of others.
I think the 888 William Hill transaction may be the end of the seismic M&A transactions in the industry. I think when we look forward, it may be overlapping industries now which come into the internet gaming world. If that's finding a way to deal with crypto, if that's real money social gaming, I think at some point, if we're going to see more consolidation, that consolidation will, I think, at some point stop being internet gaming companies buying one another, but internet gaming companies looking at related industries and bringing them in with the power of the brands of the internet gaming companies that we all know and love.
But you say that the 888 William Hill deal might be the last of the seismic deals. Don't you think there's going to be anything like, say, the DraftKings offer for Entain, right? That hasn't gone through, but it was a $20 billion, deal. Don't you think that it's just going to scale bigger? Well, I mean, why would you say you think that this is the last of the seismic deals?
Yeah, James, I'm not convinced, and we saw that the DraftKings Entain deal went away almost as quickly as it arrived on our notifications on the iPhone. Look, there may be more of those deals, but I don't think, if we look at the last 24 months, we've seen deal after deal after deal. I think that's going to move away. We won't get into the issue of valuations at the moment, but I think valuations are getting to levels where they're difficult to sustain going forward, and that will impact as well. So yes, I'm not saying there won't be any more, but I think the gold rush that we've seen will start to taper out. Look, as a lawyer, I hope I'm wrong. We love M&A deals, but that's sort of my gut feeling.
I think there's two related points to that gold rush. Firstly, I mean, the Entain deal seemingly fell over on the issue of technology and the arrangements in place with their current joint venture partner. I think there is this trend of operators wanting to control their own technological roadmap more and more, whether that's DraftKings buying SBTech a few years ago, whether that's Kindred buying Relax. I think people want that within their armory. They want to be able to differentiate. I think the interesting thing happens when those B2Cs buy the B2B. Are they just buying it for the technology? Are they going to dwindle the B2B revenues over the time? So I still think there's a gap in the market for B2C operators to try and, control their destiny more from that perspective. And then, as Gil says, I think really on the valuations being driven out of the US, the rise of the SPAC, maybe as people are predicting the fall of the SPAC, really will have an impact on the ebb and flow of the M&A transactions.
It's quite interesting that you mentioned SPAC, right? Do you think so? There's been a lot now going on. There's been a big drive to use this type of investment vehicle or means of raising finance to do some very significant consolidation exercises. Do you think that that is also going to slow down in the gambling industry, the use of SPACs specifically?
I think these things are always cyclical, and I think that there's been a rush to get these SPACs away, and some of them will work, and some of them certainly won't. It's when some of them start not to work that people begin to get more suspicious around the valuations. So I think they're still happening, but the Win SPAC got pulled yesterday. So there is a sense that things aren't just going to carry on in terms of that gold rush.
So you think it's going to be more bolt-ons and maybe localized, geography-driven, and that now the big flow of money that we've seen mostly coming from the US, to be fair, the big private equity investments, the SPACs, so on. Do you think now that's going to slow down and people are going to readjust to be looking at technology bolt-ons or low-hanging fruit, the new jurisdictions, so sort of growing by acquisition into a jurisdiction? Is that what you foresee over the next, say, 18 months?
That's an interesting question. I think the industry, to a large extent, how does any industry grow? It grows either organically or through M&A. This industry has become intoxicated by M&A. And to some extent, when you look at the results of most of the public companies, they've almost put their hands up on organic growth. And I think as we, again, my view, shift away a little from M&A, we're going to see companies looking to grow organically. Now, organically could be through bolt-on M&A, new jurisdictions, but I think that many of the companies in the industry now are not short of cash, and therefore could be using that money to try and grow into new markets organically, rather than necessarily overpaying on M&A at current valuations.
I think there's a related point on that, which is in terms of those new markets, I think there's a lot of firepower going and a lot of attention going towards the US. I think that mid-market has an opportunity, and it's not going to be able to compete financially in the US. There's going to be very few winners there. I think the mid-market has a real opportunity to try and get an advantage in some of the other markets, some of the regulating markets, and some of the more established European markets, whilst people are effectively directing their wallets over the Atlantic.
Yeah, no,
please.
Sorry, if you can just add on to that, David, what you've just said. I fully agree. I always refer to these mid-market operators as the local heroes, right? Who have a very strong local database, local presence in the online market, but perhaps also in the retail market. Yeah, so we've seen retail bolt-on transactions as well, like also expanding on shop networks. Yeah, shop networks being transferred from a franchise-driven model into an own shop model in the retail sphere. And regulation, obviously, and that's another on the last panel, obviously also being a driver. Yeah, so those local heroes that have a local presence can be very interesting because it may be the easier way to enter a market with all the compliance standards and regulation ever increasing. This is very often the easiest way to get your market entry. Yeah, and it comes with the local teams, it comes with the local management, perhaps it comes with local contacts to the regulator, and we, looking at Germany, for instance, we've seen a couple of very small operators, in part not even operators that were actually active in the market and still got a license. Obviously, that was fueled by the regulation and by the options that the German regulation gave such operators, in particular in the very first license tender. That was a bit of an essay contest, but we've seen companies that basically just got that license, and through getting that license and getting that head start in a very closed market, became a very attractive M&A target.
And that is the same in most recently in the Netherlands, isn't it? For instance, a list of first 10 licensees, and I suppose a number of those licensees really just they rode that specific bandwagon without having a legacy or a history of operating in the online gambling market. But also, I suppose if you look at the number of Central and Eastern European countries, Czech Republic, probably another example, Poland, strong local champions. Romania, possibly, and I suppose in let's call it in Western Europe, you then have places like Portugal where you have some very specific, really well-performing operators driven by perhaps not being local champions, but at least by very local expertise. So that I suppose is prevalent, and you could see any one of these countries, or any one of these operators being a nice addition now to a true multinational. I suppose the question for you guys is, in your sort of M&A practices, do you sense that any of these local champions are really thinking of doing a deal, or do they aspire to remaining a local champion and possibly then growing overseas?
It may actually be going the other way. You look at, you talk of Romania, you look at Superbet, who acquired Napoleon in Belgium. Everybody had seen Superbet as a potential acquisition target from multinationals. Superbet said, no, actually, we're going to leverage what we're doing in Romania, and we're going to become an acquirer ourselves. So whilst you're right, some of these jurisdiction-specific champions may be sources of future M&A for a multinational, or we may find them trying to come in and disrupt the industry, which may be even more interesting.
I think that's especially the case where companies are private equity backed. I think so. Fortuna and its growth across Eastern Europe, same with Superbet, that ability to access capital to fund that expansion. But I still think there is going to be this trend. You see Entain buying one of the leading Portuguese operators. You can just see that, whether it's LATAM, whether it's Africa, there's going to be a focus towards those markets and those local champions and the potential to acquire those. They may work on different technology platforms. I think one of the key things in all of those deals is the execution risk around incentivizing the management team who have that know-how to actually stay. There's no point buying these companies for the know-how and not retaining it.
Yes, I suppose that's key. I mean, the people make this business. But you mentioned Latin America in your last comment, and we don't have much time left, but I was actually told to try and wrap this up a bit sooner because we're running very late, and it seems like this panel is getting the brunt of that. But in your practices, how do you see your clients looking at unregulated markets? So is there a hope of perhaps getting in ahead of regulation, having a head start, and how do they balance the fear of that against then having a blackout and losing a valuable database, or are there other operators who still look mainstream operators, right, who still look at sort of emerging markets just on the basis of cash?
So sitting in Malta, I take objection to your use of unregulated, because grey markets are regulated for operators operating out of Malta, right? So people talk about unregulated markets, but I think they are just markets which fall under .com regulation. Yes, the regulatory world, particularly in Europe, is closing in on the industry. You see other jurisdictions outside of Europe taking a different approach. You see particularly Africa, Supergroup grew organically through Africa, and we saw how that worked out for them with their SPAC. Other operators now are looking at Africa where there is jurisdictional licensing, but it doesn't come with the same restrictions as you see in Europe. The same will be true of Latin America, jurisdiction by jurisdiction. So I don't think even when those jurisdictions were licensed, I don't think we'll see a repeat of the Netherlands, for example, which was just a little crazy in my mind.
And just, if I may, just to interject here, so building on what you said about sort of .com actually being regulated, so place for Malta, the capital markets also support that, don't they?
Absolutely. It's always interesting that the industry has a view that regulation and let's get a higher percentage of, jurisdictionally, nationally licensed and regulated revenues. And actually, when you go out and talk to many of the investors in the industry, they love the grey markets, right? Because margins are higher, ability to grow, marketing costs are lower. So yes, there's always this disconnect between an industry which has always been yearning for regulation and licensing, that when that regulation and licensing turns up, it tends to bite you from behind rather than actually giving you a real uplift for the future.
Okay, one last comment, and then we'll have to stop there. But can I invite each of you, just sort of flash, bullet point, startup, mid-size, enterprise, privately owned, thinking of an exit? A tip.
I think if you haven't got your house in order from a regulation perspective, I think a lot of deals are rising and falling especially in regulated markets where people have got, gambling commission investigations. They've got issues with bad actor arrangements in Netherlands. It's those things, if you're not paying attention to on the way, can really scupper a deal and your valuation.
Yeah, I think it's all about companies that have a specific local presence. There will be those operators that are looking for adding on .com. Yeah, US is definitely something to look out for. Yeah, with everything that comes with it, like technology, media. Obviously, we haven't even discussed media yet. Very important for US. And then, of course, private equity, yeah, where there's a lot of money to be spent, and where I do think we're going to see quite a bit of activity in the near future too.
I'm a little biased. I'm sort of looking for the next technological innovation that will come and disrupt the industry a little. You know, when you look at all the platforms, everybody's become amazing marketing companies, but I'm looking for some technology or something new which comes and shakes things up a little bit.
And with that, we're going to stop this panel here. Thank you very much, David McLeish, Gil White, Nicholas Aquilina. A round of applause, please.